Hello traders, and welcome to my video on the volume profile indicator. In this video I'm going to show you how you can use this indicator to help you capture parts of moves like this for over 100 pips. So this is the euro dollar 1 hour chart in the MT4 trading platform. I've downloaded the volume profile indicator for free online and attached it to my chart. You can see it here where it displays these bars. Okay, so basically this indicator will show you when there's low volume, high volume, and also peak levels of volume known as the VPOC or POC, which is the areas you see here where there are the thicker blue lines. I've just made them bigger from the indicator settings just so that they're obviously displayed, and these are said to be support and resistance areas based on volume. Okay, so when volume was at a peak, okay. You can use this strategy on any trading instrument, Forex, crypto, stocks, commodities, indices, etc., and any trading platform, provided you can get the volumes profile indicator. I'm using a 1 hour chart here, as I said. That's just because I prefer to trade the longer term chart timeframes, 1 hour, 4 hour, daily, monthly, weekly. Okay, simply because there's more price data and therefore I find signals tend to be more reliable. That applies to trading volume, other technical indicators, price action, support and resistance, trend lines, candlestick patterns, etc. Okay, you can use this on any chart time frame that you wish. Okay, so here we have the indicator, as I said, on the chart, and what we're going to look for is I'm not worried about these levels of low and high volume. I'm just going to basically ignore anything like this. And I'm going to stick to looking for these thicker blue lines, which are more important levels of volume, okay, when the volume was at the peak. And it's all good knowing that, but how do you trade them? Well, what you don't do is you don't simply buy when price crosses above or sell when price crosses below. Just as you don't take a reversal off every single line. What I would first do is I'm going to look for the market direction. You can see clearly here the market is making higher lows. Okay, so we're in an uptrend currently at the moment. And for the indicator, what I'm going to do is I'm going to use these levels to either trade a breakout in line with the trend, okay, or a reversal in line with the trend. So basically, I'm going to look to take a long trade because we've established that the market's making higher lows, and I'm going to use these volume lines for potential entry point. Okay, so after here, when we've made our higher low, this candle's closing, this one's open. As price approaches this peak volume level here, we can take a breakout trade to the upside. Okay, as you can see from that big candle, this would have been a good trade. Had we entered there, we could have placed our stop loss just below the low, so around 10 to 15 pips, which is relatively tight for the 1 hour chart. And we'd currently be in this position for over 60 pips. We could have had the trade locked in at break even. To be honest, I probably would have moved my stop loss up here, so the trade would be locked in here. We'd just be waiting to see how this plays out now. Okay, and if price does continue, we can continue to move the trailing stop up and just lock in more profits. Okay, in saying that, there are traders who use this in the completely the opposite way. So it's really open to interpretation because there are traders who will use it for taking reversals. So instead of buying when price crossed this line here, they look to sell. Okay, because remember, these blue lines are supposed support and resistance levels. Okay, I personally don't think that it's a good idea to use this indicator for determining entries. Why? This is just my opinion, but I'd much rather draw my own support and resistance levels. I mean, if we draw a line there, we can see this resistance level has been tested multiple times along here. Okay, there was a breakout there. Okay, it was a decent breakout. I'm not going to call that a fake out because price did shoot 30 plus pips. We would have had a break even at least before it turned around. But again, it holds up as support, holds up as resistance is bang on this line. See these prices, the closing price there and the opening price here, and then this breakout just shows the importance of this resistance level. Okay, this breakout here, I wouldn't need this indicator to tell me to take that breakout. Do you see what I mean? Of course you can if you wish. It does mean that you might, miss potential opportunities. I mean, there's probably traders who are trading this breakout here now on this candle, as you can see from this movement we've got on this bar currently. And there may have been traders who took the trade back here. Okay. You could have drawn your resistance on an angle like that. Okay, we've got a nice wedge or diamond formation there and a breakout to the upside, this big candle here. So we could have been in even before this line there, the VPOC or the peak volume line. That being said, I think it's safe to say that it actually did a good job of this trade here. Okay, if you traded the breakout in the direction, traded the breakout in the direction there. So my gut would tell me that this indicator can be useful if you are trading in the direction of the overall trend. Okay, and you draw your own support and resistance lines and of course trend lines for confirmation. Keep an eye on candlestick patterns as well. Okay, because they can just give you that extra confirmation for a trade. We have a bullish inverted hammer there. Okay, we have a inside bar there or outside bar with this bullish candle here. Obviously the market's making higher lows, so the signs were there for a turn continuation to the upside. Okay, what I wouldn't have done is when price was falling here, I wouldn't have sold there simply because the overall trend is in an upwards trajectory. Okay, and when the market's ranging, I'd probably just avoid trading altogether. For example, when we look here, let me just get rid of that. See this market here, this consolidation. I wouldn't trade in this consolidation. Okay, you can see it'd be impossible to pick buy and sell trades based on the volume profile indicator when the market is ranging like this. Okay, instead we can wait for a breakout and a pullback. And to be fair, we did have a breakout to the downside here, but this actually became a support level, not a pullback. Oh, well, it was an indefinite pullback, if you like, because the price continued in an upwards direction. Had price continued to fall down, then we would have looked at area of entry for a short trade. However, this became an uptrend, and then we can use this indicator to help assist us with support and resistance levels. But as I said, I don't think it can beat your own traditional support and resistance levels because, for example, here is showing a peak volume, but we're not going to buy a breakout of this line here. Although, one may argue if you do use it as a reversal counter trend trading, when price did fall here, it came back up, it almost touched this level and fell back down. So there is an argument for that. It's just me personally, I prefer to trade in the direction of the trend. So I'd be looking for long trades up here. Again, we could be in good positions, as I said, from here and here. Yeah, so that's just one way to interpret the volume profile indicator. Find the trend direction. Again, you can see here we did have this level of support. The market started to make his higher lows. Okay, you can wait for a pullback, and this actually held up well as a support level, as you can see. So you could have traded a reversal on that. We had the breakout, the pullback, and the bounce off the peak volume line, just as you could have traded a breakout. Probably not here because we just had that big move up. You don't want to buy at the top. If you wait for the pullback, okay, wait for the pullback, new level of support formed here. Again, the volume profile indicator didn't point this out. We do this manually, but you could have traded a breakout above the peak volume level. So it's the peak volume level we're looking for. The thing is, it's not rocket science. It's not going to be it's not going to work all of the time. You're going to need sensible money management. You're going to need to know where to place your stop losses to cut losing trades short and try to maximize good trades when you get into them. And I would prefer to trade with the trend. In saying that, if we go back to this scenario here, prior to this up move, the market was actually making. This is why things in trading are so open to interpretation, because we could look at this as consolidation, or we can look at it as lower highs and a downtrend. Okay, and if that was the case, we could have traded on a breakout below this peak volume line. Okay, see below there, and even when we had another pullback here and then it broke below again. Okay, granted, price did come up, but we did have a breakout to the downside there, and that would have actually been quite a good trade. Okay, so really, it's really open to interpretation whether you're buying, you're selling. So to narrow things down, just look at the overall bigger picture. Okay, this is my way to trade it. You can do as you please, but look at the overall bigger picture. Look for your chart patterns as well. Okay, and just make sure you confirm your entries. But what you don't want to do is, say, after a big bear rally like this one, then you're not going to really want to sell here, because you're going to be selling at the low. You're going to want to wait for a bit of a pullback. Some may argue we had a slight pullback there, and you could have ended on the break of the low, but you're only looking at 10 pips. We want to wait for a more significant pullback, something more like this here, before a continuation and a more established trend as well, because we only had this initial move here. We would have wanted to wait. Arguably this is a more significant pullback. One thing I'll argue about this indicator, it's not my preferred indicator. If I just remove it, okay, it doesn't want to remove. Okay, that's fine. There you go. I much prefer to look at the chart like this. I mean, this just makes so much more sense to me. I know that may seem strange to some, but level of support, trend line, I just, resistance, W pattern, breakout to the upside. I can just see this W pattern, down, up, breakout to the upside. They actually got at least a double bottom pattern there with a good level of support, breakout to the upside. I mean, for me, this is, I'm going to trade much better than I would with that volume profile indicator that was kind of clogging up my charts, to be honest. I'm just, price action for me is king. I mean, it tells us everything we need to really know at any given time. Okay, so for this move here that's currently ongoing, we can see that there was a level of, this level of resistance, 1 2 3 4 5 6, like 6 times this line held up. So when we did have the breakout, it's no coincidence price is flying up. We're around coming up to just after lunch London time, so the New York market is opening. We've got our kill zone, if you like, trading volumes increasing. We are on the euro dollar, so there's momentum, liquidity, and there's a big move going on now that we don't necessarily need that volume profile indicator to tell us. We got the higher lows. Okay, we got our bullish candlestick formations. All of the signs are there. What I wouldn't be doing in that is I wouldn't be selling here. Okay, so established uptrend. We're going to look to buy. Wait for pullbacks. You don't want to buy now. You might get excited and see this candle. I mean, you can. Who knows what will happen from here on in, but I'd wait for another pullback if you're not already in this position and just see how that plays out. But, this is a classic you know, trend starting to form here, we'd be worst case break even plus, 30 odd pips. Then just see how this plays out. Again, no indicators needed. I'm sure if I go back in time, I mean, a similar scenario was here in the we have our resistance here. Okay, triple top formation. Got your neckline, which is basically the support within the triple top. This is a triple top because the resistance was touched 3 times. 1, 2, 3. Okay, we can draw our support within the triple top. Can draw it like that. We can even draw it more immediate. This is a bull trap. Okay, people maybe were buying up here, trying to get in on an uptrend that didn't form. A wedge formation as well. We have see this wedge shape here. Okay, in fact, we have a level of support there. It was breached, and potential entry there as an aggressive one, even here. And then by the time the market has confirmed these lower highs, lower high, lower high, lower high, this area here would have been nice. Not just because we have this support here and this breakout to the downside, we know that the market's making its lower highs, but we also have this long-term support here, which is why you see this big candle breakout. This would have been a nice trade. All the signs were there. You've got your 3 inside down candlestick formation there, which is a bullish candle followed by a bearish candle. That's at least 50% of the bullish candle's body, followed by another bearish candle that breaks below the body of the first bullish candle. In fact, the same pattern there. I mean, that's double the signs for your candlestick formation. Spinning top there, a bearish spinning top as well. Arguably a inverted hammer, but it's all bearish price action, and this could have been a nice breakout entry there. And as the trade, as if you missed this bow or you just wanted to be more conservative and wait to see what happened, a bit like the buy trade we were watching just now, you can always wait for your breakout, your pullback. I mean, look at this level of support. See there? That's touched perfectly there. Then we have a breakout to the downside, and that level of support then becomes resistance. No coincidences. Okay. Here, you can see this level of support. Nice breakout to the downside there. Price had hit resistance, stuck in this zone. We're not looking to buy, so straight away we've made our life easier. We know we're selling because of the market making its lower highs. So that's our first thing checked. Now we just need to time entry into this potential trend. If the trend goes wrong, and price shoots up here, we just get taken out for our stop loss. And I mean, when you time your entry good like this, let's just say on this breakout here, because we had this move, pull back and then a breakout, the stop loss would only be what? Between 10 and 15 pips above this high, which is a really good stop loss for the 1 hour chart, especially when, you can afford to be wrong a few times if you're going to catch. We just zoom out. Okay. Oops. If we just zoom out, I mean, this move, if we had taken this initial breakout here, you're looking at, almost 400 pips. Okay, so with a 15 pip stop loss. So, I mean, that's a 1 hour chart in the space of less than a month. You could have captured a big trend like that. And we didn't need the volume profile indicator to tell us that. I mean, support and resistance and price action told us everything. In fact, look, you can see that it was inevitable after the breakdown of this uptrend here through that gap and then the breakout. A move like this was going to happen, and there's ample opportunities just using support to enter in on this. See this? Got an M pattern there as well. Breakout to the downside. That support then becomes resistance. I mean, there's ample opportunity to enter throughout this trend, this downwards trend. Okay. I mean, we don't need any fancy indicators, no hocus pocus, no crystal balls, just simple trend lines and price action analysis, along with, of course, good money management. And when I talk about good money management, I mean, we take this breakout trade here and we put our stop loss, after this move, initial breakout, I put it at break even. And as the market falls, I just put it at the new high. So here and here. After another fall down, and move it here, and then here, and then here, and here, and here, and here, and here, all the way down. We'll just trail the price as much as possible, maximize the move. So when we get a winning trade, we don't just panic and go, oh, I've made 50 pips, exit the trade, and you exit for 50 pips around here somewhere and just leave all of that on the table. Granted, you can re-enter, but you just increase your chances of getting a trade wrong. You know, you're gonna have to pay more broker fees, spreads, commissions, might get slipped out of a trade. But again, I've gone off on a complete tangent here. I guess I'm just trying to emphasize the fact that you don't necessarily need technical indicators. You trade how you want, and you can use the volume profile indicator if it makes you happy. But for me, the support and resistance is the bread and butter of trading, and it kind of tells you what the market is doing at any given time. And when you can capture moves like this with so many different trading instruments and chart timeframes to choose from, there's always moves like this that are going to be happening. What you don't want to do is see all this, get excited, and sell down the bottom. You know, you want to get into these. You don't want to sell at the bottom or buy at the top. You want to get into these as early as possible and ride them, and just makes your life easier. It's a good feeling being in a trade like this and just watching it play out. Sitting on your hands, not forcing trades, not scalping 5 pips, not pulling your hair out trading the 1 minute chart all day. Okay. Well, anyway, hopefully you found something useful in this video. I do appreciate you watching. If you could like and subscribe, that would be great. And I hope to catch you on the next one.